we are once again with Symposium teaser video for the Gold Investment Symposium coming up in October at Luna Park here in Sydney. I'm here with Kim O'Brien and Michael Grant from BDO. I'd like to just ask you both a couple of questions as we come up to the Gold Investment Symposium. We're going to be talking about tax and all those fun things associated with tax. I'll start with you, Michael. What are some of the ways that people can hold gold as an investment, as part of their investment portfolio?
Well, Kerry, they can do it three ways, really. They can be an investor, they can be a trader, or they can be someone who is a collector. And tax treatment of that is different depending on what status you are.
What about if you're all three? You're going to have a very complicated tax bill, I guess.
You will have a complicated position, but there are distinctive treatments for each three.
So, if I'm a collector of gold, what does that mean? Does that mean that I'm holding gold coins, or am I holding nuggets?
Well, it just depends. I think it's more about a collector is someone who holds gold statues or things that are made of gold as opposed to gold itself, although I do understand that potentially gold nuggets can have a value above their gold value.
That's correct. Well, why should, if I was going to come along to the Gold Symposium, what are you going to teach me that I don't already know? Is it a complicated area, this investing in gold, per se, rather than just trading on the share market?
Can be, because trading is different to investing. So if you have a short-term outlook, you want to be in and out of something, and you want to have gold as trading stock, which is a bit of a technical tax term, but you can actually, if things don't go so well, you can actually take deductions for gold you haven't sold, where it's gone down in value from what you paid if you're a trader. But you can't do that as an investor, for example. And it's also different if you're a collector. The capital gains tax treatment is different again.
Sounds complicated. Is it complicated? Are you going to keep it simple, or is it complicated? Am I going to need someone from BDO to unravel everything I've done in the last year? I don't know. It sounds complicated.
Look, it does have, tax has a level of complexity. The Australian tax laws are complex, there's no doubt about that. But look, we're going to try and make it as easy to get a grip on it as possible. But yes, you probably do have to get specialist advice in this area because it can be complicated.
Okay, but we're going to cover off some of those issues when you talk at the Gold Symposium.
Yes, including sort of structures you might hold.
Okay.
Assets in. For example, you might do it in a company if you're a trader. You might do it by yourself as a sole trader. Alternatively, you might, as an investor, you might do it in a trust, or as we're going to talk to Kim soon, maybe through a self-managed superannuation fund.
Yeah, well, those are coming up to be quite popular vehicles these days. So I will just pass over to Kim for a moment, Michael. And just Kim, you're a specialist in the self-managed super fund tax strategy area, I guess you call it.
Yeah.
I mean, are you seeing a huge uplift in self-managed super funds and people taking those out as a way of making their tax affairs more efficient or more?
Look, definitely. We're seeing a massive growth spurt in people who are setting up their own self-managed super funds at the moment. It's just the situation where you've got people who just want to take control of how their money's invested, and they want to control their retirement. So we are seeing a lot more people set funds up, and then doing so they always need to, I guess, have their hand held to know what they can do, what they can't do. And gold does come up from time to time.
I was going to ask you that question. Are you seeing any uptick in terms of self-managed super funds and the amount of questions you're getting asked, or the amount of gold that people are holding? Is there an increase in the interest in that sector?
I am seeing a bit of an increase in that area. We have seen some clients, gold coins is quite popular inside self-managed funds, and you can do it.
You can do that.
Yeah,
okay.
There just are a few special rules that you need to make sure we're following to keep the tax office happy. Yes, but we also see gold bullion as well. So we do see clients holding that gold bullion as opposed to a collectible item, and there are some different rules there that we have to deal with, but they're not hard.
So they're not hard, but there are different areas in holding gold, as you say. And I guess if you hold gold mining shares, that's another thing.
Totally different.
Okay.
Yes.
So we've got bullion,
Yep.
we've got collectibles, we've got coins, and we've got shares.
Yes.
And are you going to cover off all of that when you're speaking in the short time that
Yes,
we've got?
we are. We're going to cover off on all of those things when we do the presentation. And I think people will see that it's easier than what they think.
All in all, the nature of the Tax Act is It is complicated. There are twists and turns that you just don't know about. And if you don't know about them, you can end up stubbing your toe. So it's about avoiding stubbing your toe as much as minimising legitimately how much tax you pay.
So we can call your talk at the Gold Symposium "How Not to Stub Your Toe in the Gold Market."
You could.
Michael, thank you very much. Kim, thank you very much for your time.